Hi, and welcome to FreeX Financials. Today we are going to talk about the power of clean accounting records. So, if you remember from our initial video where we talk about our business model, the first layer, so the first thing we do with a customer is to check how are their accounting records, to improve their accounting records and to improve the financial reporting. In case you haven't seen that video, I recommend you that you see it. It's the link to it is in the description of this video, so just go and look at it. So coming back to this, so the first thing we do is that, right, to check on the financials and accounting of a company. Why? Because we think that accounting records is the key for unlocking business success through organized finances. So let's dive into this video and talk about this topic. So perception versus reality, the misunderstood world of accounting. So there is a common misconception that accounting is an irrelevant and boring administrative task. So most company owners tend to think that accounting is something that you just have to do and you have to do it for the government, and it's something that ends up taking you a lot of time and money hiring an accountant. So there is that misconception, and because of that, many owners tend to find accounting boring and tend to procrastinate maintaining clean accounting records. So despite having an accountant, they will just maybe forget to send the transactions or forget to send the correct information or just send information without checking it. And many times, even though you have an accountant, your records end up being incorrect. And the procrastination in organizing books can lead to financial errors and operational challenges in the long run. So let's see what can the consequences of this procrastination can be. So first, financial errors will accumulate. Not having clean accounting records can lead to inaccurate or incorrect decision making when the company must hire new resources, buy equipment or software, calculate the cost and price of a new service, among others. So basically, if if you don't have a clean accounting records, you will not be able to make decisions. So when you hire a resource, you won't be able to decide if if that resource is correctly hired. So which will be the impact of the cost of hiring that resource in your results. In fact, many companies tend to grow a lot, and they just start hiring resources and buying equipment or buying new software just because they are growing and having new customers. And when they notice they are losing money or they are winning less money being big than what they won being small companies. So in that sense, it's really important to make the correct decisions. And there are no financial decisions with incorrect accounting records. Also, delayed accounting maintenance can lead to confusion in tracking expenses, delayed billing, paying vendors and contractors the wrong amount, and other operational inefficiencies within the business. So if you don't have correct accounting records, you cannot do a correct follow-up of your account receivables. So there are a lot of companies that have a lot of customers. All of a sudden they start growing, and customers start coming in, and they are finding a hard time to track all those receivables, and maybe a customer is not paying, not because they have they don't want to, but maybe because you are very little in their cost structure and they just forget to pay you, and the company won't check it, so um, they won't uh, they won't charge the customers for the services. It also happened with delayed billing, so bills start to pile up, and as there is no system for that, the billing is delayed, so the, um, the revenue comes later, or the money tends to come later, and so there are a lot of operational issues right behind having um, financial accounting errors, or accounting records that are not accurate. So basically, financial errors means losing money. Financial errors cost money, and they cost more than what you're paying to have clean records. Having clean records is cheaper um, than having an incorrect accounting or incorrect accounting books. So what can we do? I mean, which is the real way to solve this? So basically, it's through an organized accounting records, right? So clean and organized accounting records serve as a cornerstone for informed decision making and business success. Um, First, because organized accounting records provide a comprehensive view of a company's financial position, aiding in effective resource allocation and budget planning. When you know that you can trust your accounting records, you can use them to make decisions on how do you spend your money and which is the best way and the more efficient way to spend your money. And you can start planning ahead how you're going to grow, and you can start planning your growth, planning your expenses, planning your income, and 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 looking ahead in your business. Also, data from clean accounting records enable business to make informed strategic decisions. I mean, it's not just about day-to-day decisions. It's also about strategy, about growth. So through accounting records, you can identify growth opportunities and mitigate financial risks. So when you're getting a new customer and it's a really large customer, then you can analyze that customer from a cost perspective and not just get blind by the revenue, and you can analyze correctly that customer to offer a price that really that will really enable growing in the company, and it's not just a matter of getting a new customer and that's it, right? So you will mitigate financial risk, you will identify growth opportunities, and so accounting is not, as you can see, it's not just an operational task. It's a strategic tool, right? And that's why you need clean accounting records. And also, the accounting records are essential for exiting a business. So accounting records play a critical role in preparing a company for a successful exit strategy or sale. Having a clean accounting records enhance the attractiveness of a business to potential buyers by providing transparency and accuracy in financial documentation. It's not the same. I mean, if you have a professional investor that wants to buy your company or invest on it, um, you cannot show incorrect accounting records. That will for sure scare that potential customer, because that potential buyer or that potential investor. Why? Because they cannot trust you. Having incorrect accounting records or poor accounting records means that they cannot trust the information that they are looking at. They cannot trust you. And believe me that they will be able to identify that. I mean, if you present incorrect accounting records to a professional financial analyst, they will identify those errors. We do it. I mean, when we have a customer in layer one and we have a customer with poor financials, by just looking at the income and expense, we can detect the errors in the accounting records. And also, accurate financial records positively impact the valuation of a business, as prospective buyers view clean accounting as a sign of stability and reliability, right? Once again, trust is everything when you are doing a deal of this kind. And for someone else to trust you, you must show trustworthy information, right? That's the key. So some final thoughts. The practice of maintaining clean accounting records is fundamental to achieving sustainable growth, strategic decision making, and overall business success. Also, clean accounting practices contribute to financial stability and growth by providing accurate data for forecasting, budgeting, and investment decisions. They also enable business to make informed strategic decisions based on reliable financial information, leading to long-term success and competitive in the market. And finally, they are key when you want to exit and sell your company. So thank you for watching this video. I hope that this video was interesting for you, and the reason for making these videos is for you to understand the importance of financial decisions and of financial operations within your company. So that's it for today. I hope you enjoy it, and if you have any doubt, you can always contact us to the website that you can find in the description of this video. Okay, bye.